Press the bell icon on the YouTube app and never miss another update.
Friends, welcome to another video on your channel Profit in Equities. Now if you like our content, please do hit the like button. Also subscribe to our channel and press the bell button to receive important financial news earlier than anybody else. Now Ventura Securities is a brokerage firm from India. They have recently come out with a research report for a future multi-bagger stock. Now here they believe that a stock would almost double over a period of 24 months. Please watch this video to know more about the company and also the rationale they have used to think that this company could be a potential multi-bagger going forward. Also friends, for the details of this particular research report, you can also go to the description where we have sent out the actual link of the research report. The company in question is NCL Industries Limited, and here the current market price is 282.60. Now the price when this particular stock was recommended by Ventura Securities was rupees 271, and the target price here has been set at 564 over a 24-month period. Now the code for the company is NCLIND, and NCL Industries Limited is engaged in manufacturing cement. The company offers ordinary Portland cement OPC, Portland Pozzolana cement PPC, OPC 53S cement, and plain and laminated cement, bonded particle boards, and the company's segments are cement, boards, prefab structures, hydel power, and ready mix concrete. Now if you were to look at the 1-year chart for the stock, you would see that initially there was a spike in the price of the company, but since then it's been a steady rise. The market cap of the company is 1278.28 crores, which means that the company is a small cap one. The EPS is 13.16, which translates into a price to earnings ratio of 21.47, which is very much cheaper compared to the industry PE of 47.55. The book value is 55.05, which again is available at a price to book ratio of 5.13. The debt to equity is a bit on the higher side at 1.7567, whereas the return on equity is 0.2454. The dividend yield here is 0.88 and the promoter holding is 40.20. The 52-week high for the company is 303, whereas the 52-week low is at 120. Now, if we were to look at the reasons why this company has been put forward as an outperformer going forward are: Ventura Securities thinks that the cement industry is on the verge of a turnaround. South India has witnessed a 5-year lull in cement demand owing to surplus capacities and subdued demand. States with muted growth in the past, such as Tamil Nadu and Karnataka, are expected to witness some upward bias on the back of good rainfall recently. Also, spotting the above opportunity, NCL has expanded its clinker capacity from 1.60 MTPA to 2.60 MTPA and cement grinding capacity from 0.96 MTPA to 1.71 MTPA at Simhapuri, Suryapet district, Telangana. Post this, the total cement capacity of NCL Industries will move to 2.7 MTPA. The new capacity will be operational from Q4 of FY18. Also, NCL Industries operates its business of cement particles boards under the brand name of Bison Panel, and it has additionally put up capacity of 30,000 TPA to its existing capacity of 60,000 TPA after witnessing strong demand. Further, Bison Panel is one of the market leader in the particle board business and thereby enjoys high margins compared to its other businesses. Also, this company has ordered equipment to commission a new MDF board plant which is used for making doors. The new segment will demand a capex of 40 crores, and this expects to commission and make this plant operational by September 2019. The capacity will be able to produce 1000 boards per day. Also, they expect the stock of NCL Industries to get re-rated sharply given the improved visibility on revenue growth, profitability, future expansion plans, and EBITDA per ton of cement division nearing rupees 1000 per ton. They initiate coverage on this company as a buy with a price objective of rupees 564, representing a potential upside of close to 108% from the time they recommended this stock. And this they would think would be attained over a period of 24 months. Now, this price has been achieved at via the sum of the parts valuation methodology. Now, friends, please don't treat this as a stock recommendation on our part. This is entirely Ventura Securities' own research, and the credit goes out to them. So thanks for watching, and we will see you soon with another video.